If you have been watching the stock market lately, you have probably felt chaos. One day the prices are soaring, next they are crashing. The brutal dip in late February and early March has totally erased the gain that we saw early of the year. So what is causing this volatility, and more importantly, what you can actually do to protect your investment? Stay with me in this video. We are not only talking about the reason, but also diving into one of the most reliable, better tested company that many investors turn to when the market gets rocky. It is Berkshire Hathaway, and trust me, by the end of the video, you will understand why this giant isn't just a stock, but it's practically an entire US economy wrapped into one company. Right now, we are in a perfect storm of uncertainty. Inflation is sticking around higher than expected. The next move by Federal Reserve, when they will increase the interest rate and by how much, no one really knows. And just recently, this is confirmed, the President Donald Trump has imposed the 25% tariff on Mexico and Canada, and the additional 10% on imports from China. These are the top 3 trading partners to the USA. When the market get this new, the outlook is no longer as optimistic as before, and it triggered a massive sell-off due to panic and fears. But smart investors usually don't panic, they shift to safer, time-tested play. So Berkshire Hathaway is actually one of the few companies that are trusted to perform during turbulent time. When I first started investing, I saw this quote everywhere. It goes like this: be fearful when others are greedy, be greedy when others are fearful. So now the market are in fear. There's a classic quote by Warren Buffett, and it stuck with me. Naturally, I would like to find out more about the company he built. And the deeper I dug, I realized Berkshire isn't just a stock, it is a business empire built to weather almost anything that the market throws at it. Let's talk about ownership, because who owns the company says a lot about how much confidence there is behind the company. So Warren Buffett himself owns about 14.35%. Big institutions like Vanguard hold around 7%, BlackRock hold about 5%, and some of the biggest players in finance also have Berkshire in their portfolio. That is a serious vote of confidence. What does Berkshire Hathaway actually do? Believe it or not, Berkshire started way back in 1839 when it was just a small textile manufacturing company. Over the years, it went through a lot of transformation and acquisition, and finally falls under the control of Warren Buffett in 1965. He transformed this company into a global powerhouse, owning thousands of businesses across almost every industry that you can think of. Today, owning Berkshire Hathaway is like owning a slice of the entire US economy. Berkshire core business, where the money actually comes from. Let's look at the latest earning report. There are 3 major pillars that contribute to Berkshire's success. Firstly is the insurance income that contribute about 27% of the total revenue. Insurance is the heart of Berkshire empire. The company owns Geico and major players in property, casualty, and reinsurance. Berkshire's secret weapon is float, the money they collect from insurance premium where they get to invest before they pay out the claim. And in a high interest rate environment, the floats earn even more. Second is manufacturing, contribute 21% of the total revenue. Berkshire owns companies across manufacturing space like Precision Cast Parts, which make aerospace parts, and Duracell, the household battery brand that we all know about. And third is Maclean Company, which form 13% of the total revenue. Maclean is one of the biggest food distribution in the US, supplier to giants like Walmart. Let's look at the companies they actually own. So Berkshire don't just own businesses, they also invest in public companies. Here are some of their biggest holdings. Davita in the healthcare and dialysis, which form 43.9% of the total portfolio. Sirius XM, a satellite radio giant, form 35% of the portfolio. Occidental Petroleum, the oil and gas industry, is about 28% of the portfolio. Kraft Heinz, a food industry powerhouse, forms 21% of the total portfolio. Surprisingly, Apple, which was once a huge part of Berkshire portfolio, now make up of only 2%. Buffett always focused on business he deeply understands. What makes Berkshire strategy so unique? Berkshire approach is simple but very effective. They buy wholesale business whenever possible. They invest in strong cash-generating public companies. They focus heavily on American businesses, and they always think long-term, no chasing quick win. This is a mindset that every investor can learn from, and it is called value investing. So what are the risks? No investment is risk-free, and even Berkshire has some potential risks. First, let's talk about key man risks. The biggest question is, what happened when Warren Buffett stepped down? The good news is, Buffett already named his successor, Ray Abel, a long-time Berkshire executive who is expected to continue Buffett's patient and disciplined approach. Second, regulatory risk. Some of the Berkshire key businesses like insurance and utility are heavily regulated, which can limit the profitability. Third, market cycle and industry shift. Berkshire isn't immune to economic cycle, and some of its business like the oil and gas company face long-term challenges as industry evolve. Why so many investors love Berkshire Hathaway despite all those risks? Berkshire remains one of the most respected and trusted companies for a few key reasons. First, massive cash reserve. Remember back then when COVID-19 hit, Berkshire had billions in cash ready to deploy. Today, they're sitting over $48 billion, up 25% year over year. It is like Berkshire is ready to grab the opportunity when the market crashes. Second, consistent performance. In the latest earnings report in Q4 2024, the company's operating earnings jumped 71% year over year to $14.5 billion, and the total revenue hit $371 billion. The consistent, strong financial performance has definitely boosted confidence of investors. Third, defensive and diversified portfolio that Berkshire is having, with businesses across insurance, manufacturing, energy, food, and more. Berkshire is built to withstand uncertainty, making it a defensive play for rough market like now. Final thought, is Berkshire worth buying? So if you're looking for stability in a chaotic market, a proven business model with decades of success, a leadership team known for patience and discipline, then Berkshire Hathaway is definitely worth a closer look. As Buffett said, the stock market is the device for transferring money from the impatient to the patient. Would you invest in Berkshire Hathaway? Please drop a comment in the section below. If you found this helpful, do like this video and subscribe to the channel for algorithm, and hit the bell for notification whenever we post the video. Thank you for watching. See you in the next one.